If you're sitting on a 6 or 7 figure crypto portfolio, this is your last chance to exit before Bitcoin falls another 50%. Every US recession since World War II started with this exact same signal in the market. And in this video, I'll show you the critical signal that has predicted every single recession, why Bitcoin is about to crash another 50% and the S&P 500 around 28%, why I'm short right now, and what you need to do before stage 5 of the bear market hits. So let's go back in September, October, I shorted Bitcoin at 120,000 US dollars. Then later on, I called that Bitcoin will fall below 60,000 this year. And just 2 weeks ago, and this is very important for this video, I posted this publicly on YouTube and X and said, crash warn, do not be mistaken by the recent pump and the coming one. We have seen a pump 2 weeks ago and then a bit of a correction, and the last few days there was another pump last week. There will even be slight euphoria in the markets, something I also predicted. At Sonderberg Research, we're opening our short setup and shared the exact strategy with our clients. Here is my short, by the way. I just posted it today. Our average entry price is right now at 81,000. As of now, it could be higher, of course, depending on how Bitcoin moves, but more later. So retail will not be ready for stage 5. Bitcoin has not bottomed at 60K. I repeat that. And stage 5, the true capitalization phase, will hit like a hammer in May or June. I've talked about all these stages in my previous video. It's called I sold the Bitcoin top, here's when I'll buy again. And here you see them again, we'll go more into it. So I'm calling a US recession, a Bitcoin crash, and everything will crash. Stocks, crypto, and other risk assets. So enough talking, let's get to the facts, what I'm seeing, and what I'm seeing right now. So first, where are we right now? Where is Bitcoin right now? So Bitcoin is right now in stage 4, transitioning into stage 5. We obviously don't know exactly if we're already going into stage 5, if this correction, this rejection we have seen over the last few days is the start of stage 5, or if there's another pump and then stage 5. But I think it's very close. Next few weeks, we will see this first move into stage 5, and then over the next few months, a crash down into our accumulation phase, which is from the top here, this local top, another at least 45%, up to 50, 60%, right? So this is why I'm expecting a 50% crash. So how do I get these numbers and why this rejection here for Bitcoin? So first of all, we have 2 lines that are very important. We have this orange line here, which is the 200-week moving average. This is usually where Bitcoin bottoms a bit around there or below it. And then we have the 200-day moving average. And if you go back in history and look at Bitcoin, we have the last bull market of 2021. And going into 2022, we started going down, Bitcoin started going down. And whilst in the bear market, it had a rally, right? A bear market rally, where it retested the 200-day moving average and it rejected. And from there, went straight down to the 200-week moving average, 67% from there, another 67%. So it went to the 200-week moving average, and from here about 31%. Yeah, so 31% below the 200-week moving average. Then we have 2018. Bitcoin bull market is over. Here we go. Bear market, 200-day moving average retest, another retest here, and then bottom formed exactly at the orange line, which is the 200-week moving average. And then COVID crash, obviously another bottom here, but this one was lower and exactly at the 200-week moving average. And then we have another bull market, 2014. Well, 2013 and 2014, we go into a bear market where Bitcoin also retests the 200-day moving average, fails, and then actually goes above it for about 2 weeks to then just crash below it and test the 200-week moving average, which was the exact bottom. So what does this tell us? So it tells us that the white line, the 200-day moving average, is a very strong resistance for Bitcoin, and it will most likely not go way above it. my guess is not more than 5%, right? So my guess is 85,500. Why this exact number? In a minute. And the bottom will likely form in this zone down here in the accumulation zone. My base case again is 37,000 US dollars, September, October of this year. This could obviously change. I always say that. We use local signals always. This is very important. If you don't use local signals and you just stick to a price target, that's the biggest mistake you can make. But we still predict and we still execute but stay flexible with our metrics that we get in every day. If the facts change, you have to change your opinion. So this would be from here down a 21% correction at 60,000 around there. But again, last bear market, it went down 30% from there, which would put it at 41,000 US dollars. So very close to my target. Why is it possible that we're not yet in stage 5 and the crash is around the corner but not going to happen in the next few days? Well, there is a likelihood, and that would be great for me because I'll add to my shorts and our clients at Sonderberg Research. There is a likelihood where Bitcoin moves up to $85,500 in the next few days before the crash. There's also an even bigger likelihood that this is it. This was the top here at the 200-day moving average, just retest, and we're going down now. Why is there a likelihood that there will be another pump? Well, this is the liquidation heat map for Bitcoin, the Bitcoin USDT pair on Binance, and it shows you that there's a lot of liquidity up there, especially up to $85,500 US dollars. So there's a huge incentive for market makers, the people that move markets, to move Bitcoin up here. And if you remember, stage 4 traps bulls and bears. It's a draining sideways range where fake breakouts and false breakdowns exhaust traders, destroy this one and prepare the market for one final capitulation. This is where panic peaks, weekends get flushed out, and the market moves into its final bottoming zone. So before this happens, traders have to be really tired. They have to be destroyed. And how do you do that? With bull traps and bear traps. And what have we seen over the last few weeks since we've been in this stage 4? A lot of that. And this is another huge bull trap. This here was the biggest bull trap of them all. This one was another one here, and obviously at the top here. But this one was a bull trap. This one was a bull trap. This one's some sort of bull trap, but this one's the big bull trap, the one we have seen last week. Massive bull trap. And if you're not on the right side, you're going to get destroyed here. So there is a likelihood where Bitcoin actually goes up to 85,000 around there. It's not my absolute base case, but it is likely, and we would add to our shorts. So again, 60K here is not the bottom. Bitcoin will fall down to 45,000 and below. That's very likely. And it's going to happen over the next few months. So buckle up. So now, before we look at the other signals, why there's a US recession looming, why there's a US recession right around the corner, just wanted to let you know, if you need one-on-one help from me, go on sonderbergresearch.com, the first link below, and book a one-on-one strategy call with me. So, first, why is it worse than you think? Let's look at the macro case. This is not just Bitcoin, but it's going to affect Bitcoin hardly. It's going to be very tough. So first, we have a few points that we go through here. And the first one is the oil spike recession signal. So every US recession since World War II, excluding the pandemic, was preceded by a oil spike. Let's look at this chart. In gray, shaded in gray, you can see US recessions, United States. You have 1979 oil crisis, oil spike, recession. 1990 Gulf War, oil spike, recession. You have oil spike, millennia, recession. You have 2008, recession, oil spike. And now we have another oil spike. So, also I want to mention, according to experts back then, if you remember, this was not a recession here. They changed a bit the facts around, they kind of changed the facts there. I'm not going to go in detail, but it was almost a recession. And there was also an oil spike, just so you know. So we have Iran war 2026, another oil spike. Everything's going up. And talking about everything going up, let's go to the next problem, which would be CPI. Before we get into that, what does that mean for the S&P 500? Why would that be bad? Well, on average, the S&P 500 crashes 28% during a US recession. 28%. Well, let's look at it. This is the top here, 7,500. 28%. That would put it at $5,400. My base case is that the S&P 500 will fall below 6,000 this year, likely even much lower. If the Federal Reserve doesn't even intervene, it does intervene very often, but if it doesn't, don't be surprised if we fall 40, 50%. Don't be surprised. Obviously, facts can change. Things can change. The war could be over tomorrow and so on. But there is the oil spike is here. It happened already. So it's already affecting, and we're looking into this right now. So we have CPI. April CPI is at 3.8% year over year, highest since May 2023. We have PPI at 6% year over year, highest since December 2022. The month over month is at 1.4% versus the expected 0.5%. So that's 3x the forecast. Unbelievable. We have core PPI at 4.4% year over year, multi-year highs. So most of it was driven by the PPI was driven by service inflation. So 60% was driven by service inflation. That's very sticky and doesn't reverse quickly. So even if the war is over, that doesn't just reverse overnight, the PPI inflation. Real wages fell 0.5% in April. So we have consumers squeezed from both sides. It's really bad. Then we have the Fed trapped. So we have here headline, the Federal Reserve is quickly running out of reasons to cut interest rates. We knew this. I've talked about this extensively in various videos last year here on YouTube. More in detail with my clients, obviously, but I have talked about this publicly. The regimes have changed last summer. You could see it. Institutions have changed how they invested, and they have seen that something is on the horizon. And what have we seen since then? Well, Bank of Japan, right? Hiking rates. Lots of central banks saying, oh, we're about to stop lowering rates and might even hike rates this year. We knew this since last year, almost a year now, summer of 2025. So the Federal Reserve can't really cut interest rates, as we all know now, because of inflation. The inflation goal was 2%. Where is it at 3.8% right now? So almost double. So we can't really cut. If it cuts, it will just fuel inflation even more. And it can't hike either, right? It could if the Federal Reserve now hikes interest rates, first of all, there would be panic in the market, and also it could trigger a recession, right? Because of the slowdown in the economy. Then Bank of America expects no rate cuts for this year. Obviously, that could always change, but it's very unlikely that there will be any rate cuts this year. If not, there's some sort of intervention. But look at this. You go on cmegroup.com, the official website, and you see what the investors are seeing and the conditional meeting probabilities for interest rates. So this is either a hike or a cut. So what do we have? No cuts this year. There's no expectation of a cut this year. There's actually even expectations of hikes next year. So no rate cuts, no liquidity, no fuel for risk assets like Bitcoin. Then another problem, we have the yen carry trade unwinding. It's over. So we have the Bank of Japan hiking for the first time in decades, US-Japan spread narrowing, leverage capital unwinding, And that pressures equities, credit, and Bitcoin simultaneously. That obviously especially is hitting on tech stocks. And again, the regimes have changed. We knew this months ago. It's just the consequences are hitting now, right? It takes a while to settle and to set in. So the cheap money trade that fueled everything, especially tech stocks, is reversing. Then another very important signal that we use is the net unrealized profit loss. It's a very good chart that you can use. Very interesting. It's free. And you have this here. You have in white the Bitcoin price, and you have in yellow the net unrealized profit loss chart. And when we're in the red zone, when this yellow chart is in the red zone, or it's usually a bit euphoric, greedy times. I would even say nowadays the belief denial area is where it's greedy. But more importantly, where is the bottom? And it's in this green area in the capitulation phase. Again, I wouldn't just use one chart, one indicator to time a bottom or top. That's very important because these charts could be wrong. That's why I'm showing you all these options. So right now we're in the optimism anxiety zone, and we're nowhere near the green zone. We're not in negative. Every bottom has been here below zero in the negative, here too, here too. So we're nowhere near. So the bottom is not in. 60K was not the bottom because at 60K, it was still in hope and fear and not capitulation. Then the math is not adding up, right, with the cycle. Let's look at this. A cycle usually takes 4 years. From bottom to top 3 years, from top to bottom a year. So the bear market is usually a year. We are 31 weeks into the bear market. So far away from it. And let's look at it. Is that true? Is it really 4 years? Yeah, let's look at it. Good question. It's a fair question. So we have the top here in 2013, roughly a year later, the bottom, roughly 3 years later, the top. Then 2008, 17, 18, roughly a year later, well, actually on the week, a year later, we have the bottom. Roughly 3 years later, from here to here, we have the top in 2021. Then a year later, we have the bottom in 2022. And roughly 3 years later, we have the top in October of 2025, where we shorted. And now another year later, this would put it at early October. So where are we now? We're in May. So we're technically, historically, if you just look at it historically, far away from a bottom. Bitcoin has not bottomed yet. It hasn't bottomed at 60K. Then another very interesting chart. This is average and median annual return by political regime. The strongest is when there's a Democratic president and a split Congress. That's the strongest year. So after the midterms for next year, that would be the strongest, but we're very likely not going to get that. We're very likely going to get one of these, and you see it's the weakest. So it's Republican president or split Congress or Democratic Congress. So we're going to get very likely going to get a bad year. So a bad 2027. So let me be clear. Inflation is at 3-year highs. The Federal Reserve can't cut. Oil is spiking like it does before every recession. The carry trade, the Japanese carry trade, is unwinding. The weakest year of a political cycle is coming. And Bitcoin hasn't even corrected halfway. And everything hits at the same time right now. And a US recession would hit everything. Crypto stocks, commodities, everything. So if you're still bullish, you're on the wrong side since October. And you're going to round trip once again. So this is really your last exit. So if you take your portfolio seriously, if you want help, check the first link below. There's a one-on-one call that you can book with me. God bless you.